My name is Billy Jack, and I'm a professor at Georgetown in the economics department. I've been working in Kenya now for 5 or 6 years, looking at issues around mobile money and many other things. And I've done some work with a Kenyan colleague at MIT, Professor Tavneet Suri. She and I have now done 4 surveys of households across Kenya, of about 3,000 households each, with the objective of finding out what is really happening at the household level, at the individual level with M-Pesa. I think as you come down the runway, the entryway into Jomo Kenyatta Airport, you would think that the only thing happening in Kenya is mobile telephony because of all the advertisements that you see. And the same is true in Lusaka and every other capital, it seems. So there's clearly success of the mobile phone industry in Africa. The question we wanted to ask was, what does it mean for people's lives, basically? So it turns out you've spoken a lot about financial inclusion, and I think it's useful to ask, what does that mean? At one level, it can mean having an alternative to cash that people use on a daily basis. Certainly, I hardly ever use cash these days, and it's a good thing. But you've noticed that you've mentioned something we found in our surveys that the modal use or frequency of use of M-Pesa is about once a month for people. About 40% of households reported that they use it about once a month. So that gives the impression that it's people are not really included in that sense, that they're not using it all the time for every transaction. On the other hand, something we've found, which is really quite striking, is that if you're not an M-Pesa user, then, well, first let me preface this statement by saying people in developing countries, and in Kenya in particular, are very vulnerable. They're exposed to risks on a daily basis, ones that, again, in rich countries we are sufficiently protected from. And this shows up in our surveys. So people often report that they've had some kind of bad thing happen in the last month or two. It might be an unemployment issue, maybe the rains failed and their crops didn't come in, maybe they had some kind of health shock, etc. And in Kenya, there's very little in the way of formal insurance against these kinds of events. People don't just sit there and take it. They find ways of helping themselves effectively through informal insurance networks. So basically, they help each other out. And this is there's no contract written down, there's no formal statement or anything like this. There's, family and friends kind of help each other out. That turns out to be a reasonably effective way of dealing with risks in many countries, but it's not perfect. In fact, we find in our surveys, for instance, that on average, when someone's hit by a shock like this, their consumption goes down by maybe 7 or 10%. Right? So they're hurt, they have to give up something when this happens. On the other hand, we found that amongst M-Pesa users, that didn't happen. Okay? M-Pesa users were able to protect themselves against risk. Now you will say, oh, that's because people who use M-Pesa are different. It's true that we had to account for that, but we spent a lot of time with our data making sure that we accounted for all the other ways in which M-Pesa users were different. And we found that there was something about using M-Pesa that allowed them to protect themselves against risk. It wasn't that they were able to buy insurance, it was that they could access a network more effectively. In particular, they reached out to more people, and they got more money when things went wrong. This is exactly what happens in formal insurance. You get money when things go wrong, and M-Pesa effectively allowed that to happen on an informal basis. And obviously, the obvious route was that they could reach to more people and to people who were further away. So in that sense, I think M-Pesa really has increased financial inclusion, or at least it's for those people who are included, this has been a real impact on their lives. Now, how many people are included? Our most recent survey suggests possibly 80% of households have an M-Pesa user in them. So that's quite a deep penetration. And that's not all just at the top. It's not that the bottom 20% are left out. There's quite significant coverage right at the bottom as well. So I would say that, in one dimension, M-Pesa has reached people and they benefit from this. In other dimensions, like on this very, very transactional intensive margin, where people are actually buying things on a daily basis, the transaction costs are still way too high for that to be functional. On the other hand, cash is a wonderful mechanism of financial inclusion as well. And the poor people in Kibera and Viondani, etc., they do use cash. They are included in the financial system through that mechanism. M-Pesa has allowed them to be included in this other dimension, which is maybe less of a daily need, but no less acute when things go wrong. So I think, I would say that M-Pesa has allowed people to be included in the financial system. Over the period of our 4 surveys, number of households with access to a bank account went up, but by nowhere near the same as the number of households with M-Pesa access. The number went from 50 to 52% or something like this. So there's slow movement on the banking side, but that's obviously going forward, partly due to equity. But there's been this rapid growth in M-Pesa. I think, could M-Pesa be designed differently? Absolutely. Is it better than nothing? I would say absolutely as well.
Doing business in Africa, you can't afford to be without Africa Investor.